Okay, good morning, ladies and gentlemen. Thank you for joining us this morning. I was waiting that we should be, yes, things that comes late. Probably we should cover up for them. So, yeah. So, good morning, ladies and gentlemen. Thank you for joining us. It's Coach Mopiwa here. We are going to continue from what we left yesterday. Thank you for all the leaders that are also joining us this morning. We really appreciate your presence in the Zoom. So yesterday we started afresh our lessons, our syllabus. We started afresh. So we started from trading view and we are going to proceed today, taking it further. Yeah, taking it further from where we left yesterday. Yeah. So we did trading view navigation, how to navigate the trading view app, how to use the trading view app. That's what we did yesterday. So today we are going to go a little bit further into our training. I'm going to share my screen. Is my voice audible? If you can hear me, give me one. Is my voice audible? Am I audible enough? Can you hear me? Okay. All right. Okay. At least I've got a confirmation. I've got a confirmation that I'm audible enough. So I'm going to share my screen. Okay. Can you see my screen? Can you see my screen? If you can see my screen, give me one in the chat. If you can see my screen, kindly give me one in the chat. If you can see my screen, kindly give me one in the chat. If you can see my screen, kindly give me one in the chat. Okay. All right. Okay, so let's get into it. All right. Now, yesterday we did navigation of the trading view app. The reason why we were doing the trading view app is that we are going to use it for our technical analysis. For one to technically analyze the market, the presence of trading view is a must. Having trading view is a must, because now we are going to look at technical analysis, analysis of candlestick, analysis of candlestick chart patterns, and everything that has to do with the technical analysis of the market. Now, we are going to start from here now. When we are looking at the market, we normally use candles. Now, let me begin from here and say, in the crypto space, when we are doing our technical analysis, normally you're going to use, or you're going to hear the words, the bulls, you're going to hear the words bulls, okay? You're going to hear the words bulls, you're going to hear the words bears, okay? If you're not hearing these two, you are going to hear the word buyers, and you are going to hear the word sellers, okay? These are the common words that you are going to hear being mentioned, okay? So the bulls, they are the same with buyers. When someone is talking about the bulls in the market, is referring to buyers in the market. When someone is using the word bears in the market, the person is referring to sellers in the market. So these two people, let me call them people. Allow me to call them people now. Yes. The buyers and the sellers, or the bulls and the buyer, the bears, they are the ones that are called market movers. They move the market, or they dominate the market. For the market to be there should be the presence of buyers and sellers. Okay? So some other times you are going to hear the word like demand and supply. Okay? You are going to hear the word demand and supply. Okay, so demand also refers to buyers, while supply refers to sellers. Okay, but in the crypto space, you are going to be familiar with all these ways: buyers, sellers, demand, supply, bulls, bears. So these are the market movers. These are the ones that controls the market. That's why you are going to hear when we say Royal Q does not control the market. As we don't control the market. Who controls the market? The market is in the hands of buyers and sellers. The market is in the hands of bulls and bears. Now, for us to track the behavior of buyers in the market, for us to be able to track the behavior of buyers in the market, for us to be able to track the behavior of sellers in the market, we need a tool that we can use to measure their behavior, their emotions in the market. For us to be able to track them, we normally use candles. That's when candles comes into place. I'm starting from here now. I want you to follow me closely. Why do we study candlesticks? All right. Why do we study candlesticks? Why do we study candles? I'm saying in the market, in the financial market, there are buyers and sellers. There are bulls and bears. There is demand and supply. For us to understand the behavior of demand, for us to understand very well the behavior of supply, there is a tool, or we need an instrument that we can use to measure the behavior of these people. That's why we are looking at candles. All right. That's when candles came into picture. All right. So I want you to follow me closely, because I'm taking you from here now to another level. So the reason why we are using candlesticks is that we want to be able to understand the market behavior. The market behavior, we are referring to buyers and sellers. We are referring to demand and supply. We are referring to bears and bulls. Are we together? Let me find out if you are following. I'm trying to lay a background here. I'm trying to lay a foundation so that I take you with where are we going? Because when we go further from here and you are remaining behind, then it's going to be difficult to take you with. If you are following me, give me a yes in the chat. If you are following me, give me a yes in the chat. Give me a yes in the chat. Give me a yes in the chat. Okay. All right. Let's proceed. So I'm saying, for us to understand the market, whenever we are talking about the market, we are saying we are referring to buyers and sellers. For us to understand these two characters, we need a tool that we can use. Remember, to the buyers and to the sellers, there is something that we call price that is connected to them. We cannot talk about market if there is no price. Okay? We cannot talk about market if there is no price. All right? So the sellers and the buyers, they move with price in their hands. They carry this thing called price. Wherever they go, they carry the price. So when it comes to price, buyers, when they enter the market, where do they open their market? Before I come now to candles, I want you to understand that when it comes to buyers, when they enter the market with the price, where do they open their market? They open from the bottom, they go up when it comes to buyers. Because buyers, they have got a tendency of buying low. Remember, buyers, they want to profit. So they make sure that they buy as much as low as it can be. So they will open their market from the bottom, closing it on the top. That is buyers. So the reason of buying from the bottom, they want to find an opportunity to profit. So buyers, they open their market from the bottom, they close it on top. While sellers, they do the opposite. They open from the top, they close it on the bottom. So what I'm simply saying is, buyers, they are the ones that pushes the market to the top. Buyers, they are the ones that pushes price from the bottom to the top. While sellers, they are the ones that pushes price from the top to the bottom. So sellers, they do opposite of the buyers. So I'm simply saying there should be buyers, okay? There should be buyers pushing the price to the top. There should be sellers pushing the price to the bottom. So buyers, they are the ones that pushes price to the top. So in this case, buyers, they open from the bottom, they close at the top. Sellers, they open from the top, closing at the bottom. If you have gotten that, give me a 1 in the chat. If you have gotten that, give me 1 in the chat. Give me 1 in the chat if you have gotten that. If you have gotten that, give me 1 in the chat. If you have gotten that, give me 1 in the chat. Okay. Okay, now I'm moving. I'm saying if you don't get it, please ask, because if I leave you here, I'm trying to build a block so that I take you with. All right, I take you with. Now, since buyers, they open their price from the bottom, closing it on the top, and sellers, they open the market from the top, closing it at the bottom. Now, I said that for us to track the behavior of these two people when they are pushing the price, whether they are pushing it to the top, whether they are pushing it to the downside, there is a price that is connected to it. So for us to track that, we are using candles. The development of candles came into picture. So we want to analyze, we want to study the behavior of buyers through a candle. We want to study the behavior of sellers through a candle. All right. So when it comes to candles now, here, let me open this a little bit bigger. Okay. Now, we want to use candles to analyze the behavior of buyers and sellers. Now, in these candles, you are going to see that we do have two types of candles. One of the candle is painted green and the other one is painted red. So this is a representation of the two characters, which are buyers and sellers. So buyers, we have given them a green candle, while sellers, we have given them a red candle. So when you come to your trading view, you see this green candle, you should know that it represents buyers. Okay? When you come to your trading view, you see these two colors. Green represent sellers, buyers, while red represents sellers. These are bulls. Okay? This is demand and this is supply. So we are going to use these two colors to track the character or the behavior of sellers and buyers in the market. So in this case, I have already said that buyers, they normally open their price from the bottom. Okay? Buyers, they open their price from the bottom, they close it on top. While sellers, they open their market from the top, they close it on the bottom. So we are using these candles to analyze the character of buyers. Now the question is, why do we use candles? Why can't we use other things to analyze the market? Why are we using candles? All right. So let me give you some reasons why do we favor candles instead of other things, because we can use lines to analyze this. But why do we favor candles? So I want to give you reasons why we are deciding to use candles. So when you look at candles, it is a visual representation of what is happening in the market. Candles, they act as a visual representation. When you look at the candle right there, you are going to see what is currently happening in the market. So visually, the candles gives us a visual representation of what is happening in the market. That's why we favor candles. So I'm saying candles, first, they give us a visual representation of what is happening in the market. When we are analyzing the market, it is very important that we understand why do we use candles. So by looking at a candle, we can see the valuable information like where the price has been open, which is called the open. I'm going to come there into detail and analyze a candlestick. All right. So by looking at a candlestick, you are going to see where the market has been opened, where buyers entered or where sellers entered their market. Okay. By looking at the candlestick, you are going to see where buyers closed their market, which is called the close. Okay. Even the sellers, where did they close the market? Just by looking at the candlestick. That's why I'm saying the candlestick is able to give us a visual representation of what is happening in the market. Does it make clear? Do I make myself clear when I say candlesticks? They give us a visual representation. Just by looking, you are able to see that there is the opening of the market here. The market was opened here. The market was closed here. When the market was closing, this is how high the market went. You are going to see the high of the market. Okay. You're going to also see the low, how low the price went. Remember, when we are looking at the market, we are dealing with price. We cannot talk about the market without price. So the price should be opened somewhere. The price should be closed somewhere. The price should go high in the market or it should go low in the market. So you can track this just by looking at the presence of a candlestick, which is a visual representation. I hope that is clear. Why do we favor candles? Secondly, why do we favor candles, or why do we use candles? Candles, they are flexible. Candles, they are flexible. You need to understand that when we say candles, they are flexible. When I say candles, they are flexible, they can be used alone to track a price. You have been, those that have been here, they can agree with me that we can draw support and resistance on a candle and find an entry as well as an exit just by using a candle. Those that have been here, they can agree with me. Leader Julius taught us drawing support and resistance on one candle, and we find an area to enter and an area to exit. That tells us that candles, they are flexible in nature. That's what I mean when I say candles, they are flexible. All right. Thirdly, I have talked about visual representation. I have talked about flexibility of the candles. What else can you find when you are using candles? All right. Candles, they provide more valuable information than bar charts. I'm comparing candles to bar charts. Okay. I'm comparing candles to bar charts. When I say candles, they give valuable information than bar charts. What do I mean? I want you to look closely here. I want you to look closely here so that you are able to understand when I say bar charts. This is how a candle looks like. All right. Now, I'm going to change the presence of candles. I'm going to bring something different. So I want you to tell me if it is easier to track the price using what I'm going to bring here instead of a candle. All right, I'm going to change right now. I want you to see what I am talking about. What I am talking about. I want you to see. I want to change here. Okay, I want to change here and bring something different. I want to bring something different. Okay, I want to bring something different here. All right, I want to bring something different. So when I say candles, they bring valuable information than bar charts. Candles, they bring valuable information than bar charts. Okay, I think I'm at the wrong place. Let me tap here. On chart setting. Okay, let me change here. Oh my goodness. No phone. The phone is dead. No battery. Hey. Now my data is on this phone. I'm supposed to load data here. Okay. Am I still in the Zoom? Am I still in the Zoom, guys? Am I still in the Zoom? Am I still in the Zoom? Okay. Okay. All right. I thought I have. Okay. All right. Okay. Let's proceed. I was trying to connect my other gadget because I saw that this other gadget is low on battery. Okay. So let's proceed if that is the case. All right. Okay. Just a minute. All right, sorry for that, guys. Let's proceed. So I was saying that when it comes to candles, they are able to give us valuable information compared to bar charts. So I was trying to change here if I remove the presence of candles and bring this to you here, so this is a candle that you are seeing on your screen, okay? So if I change it to a line, for example, I put a line there, okay? When you are using a candle and you are using a line to track price action, which one is easier to use? Which one is going to give you correct information? All right, this is a line. What about if I bring bars? If I bring bars here, are you going to be able to analyze price action using a bar chart? This is what we call bar charts. Okay, so I was comparing between candles and bar charts. That's why I'm saying candles, they are flexible. Candles, they are flexible. They give you valuable information compared to bar charts. Okay, so this is what I meant, so that you are able to understand. When I say candles gives us a visual representation first, they also give us valuable information. Not only that, they are flexible in terms of using them. So that is the reason why we choose to use candles. Okay, that is the reason why we choose to use candles. Probably someone is asking, why do we use candles instead of something else? So we are saying candles, they give us a visual representation of what is happening in the market. Are we together there, guys? Before we move now and go deeper into analyzing a candle, we want to go and analyze a candle. Are we still together? Are we still together? Give me one in the chat if we are still together. Give me one in the chat if we are still together. Give me one in the chat if we are still together. Give me a one. Give me a one. Give me a one if we are still together. Okay. Now let's go here and then analyze a candlestick. I want us to analyze a candlestick. All right. So I said that a candle has got a place where it opens, or price, it has got a place where it opens. Okay, so let me bring a slide here that we are going to use to analyze a candlestick. All right, I'm going to bring a slide here that we are going to use to analyze a candlestick. All right, so let me just load it here, then we go into it. There, I was just giving a foundation. I was just giving a foundation right there about candlestick. All right, I was just giving a foundation there about candlestick. Okay, let me share my screen. Okay, can you be able to see my screen? If you can see my screen, give me one in the chat. If you can see my screen, give me a one in the chat. If you can see my screen, kindly give me one in the chat. If you can see my screen, kindly give me one in the chat. Okay, so we are here. I was in TradingView helping to make you understand why do we use candles. We are using candles to track price action that is done by buyers and sellers when they are conducting their activity of buying and selling. The emotions, the behavior of buyers is hidden in a candle. Just like me and you, when the market is pumping, what normally happens? Have you ever seen Royal Q family or Crypto Ambassadors family? When the market is doing well or when the market is going down, have you ever seen what normally happens in the WhatsApp group? The way people, they express their emotions there. Have you ever seen it? So for one to track that, for one to know that crypto ambassadors, they are down because the market has gone down. What can you use to track that? The behavior of crypto ambassadors. One can read that through a candlestick. Yes, one can read that through a candlestick. That's why we are dealing with candles here. So when you understand candlestick, you are going to understand the language that buyers and sellers uses to express themselves when they are conducting the activity of buying and selling. That's what I am trying to portray to you. When you understand candles, you will understand the language of buyers and sellers. That's the language that they speak. Whether they are down, whether they are up, you're gonna know because of candles. So candles, it is a language that is spoken by buyers and sellers in the market. The bulls and the bears, they communicate through candles. Demand and supply is tracked through candles. Now, I said that when it comes to buyers, buyers, they open price at the bottom, they close it on the top, because buyers, they want to buy low and sell high. Just like me and you, whenever we are making an entry with our robot, when entry with our robot, that I'm using now. So I was temporarily out, but I'm back. So let's proceed. I think I was sharing my screen. I was sharing my screen and I was here. Okay, I will try to move as fast as possible, but I make sure that I don't leave anyone behind. Okay, so I was here. We are trying to find out buyers in the market. All right, we want to analyze buyers in the market by using a candlestick. Now, when we look at a candlestick as a such, a candlestick needed to have what we call the open. All right, the candlestick should have what we call the open. When we say the open, what are we referring to? Where price is opened. Remember, we trade in the market, in the live market. So we trade in different sessions. When I say sessions, what do I mean? Remember, we can trade in 1 hour session. We can trade in 30-minute session. We can trade in 4 hours session. We can trade in 4 days session. All right, or I mean in 1 day session. So whatever session we may trade in, the price needed, the market needed to be opened somewhere. Okay, so where the market is opened is what we call the opening of the market. Remember, we are always attaching the opening of the market, or we are referring a market with price. There is no market if there is no price. Okay, so where the market is opened, it is called the opening of the market. Okay, so the candle should have what we call the open, where prices are opened on that particular session. Okay, when prices are opened, they should be closed as well. The market cannot run throughout. The session should be closed and another session should open. Whether you are trading in a day session, that day should come to an end and another day should come. So we are saying when the market has been opened, it needed to be closed. That's why we do have what we call the closing of the market. When I say market, just know in your mind that I'm referring to price. So once the price has been opened here, the price should also be closed, which is the market. But you should understand, in the process, once the market has been opened, in the process, either the market can go up high or it can come low down. Okay? So how low the market can go, that's what we call the law of the market. How high the market can go, that is what we call the high of the market. So when we're talking about high, we are referring it to how the price went high, how far the price went high when the market was opened. That's what we are referring the high of the market. When we're talking about the low of the market, we are referring to how price went low when the market was opened. So this applies to both sides, whether they are buyers, whether they are sellers. All of them, they need to have the high, they need to have the low, they need to have the open, they should have the close of the market. The only difference is when it comes to buyers, I said that buyers, they open from the bottom, they close on top. Sellers, they open on top, they close on the bottom. So I do have two different candles here. One is black in color and the other one is white in color. The one which is white is for buyers. The one which is black, it is for sellers. But when we go to trading view, you are going to see that the one for buyers, it is green in color, okay? The one for sellers, it is red in color. So don't mind about the colors. You should not mind about the colors, no. I just want you to learn where does the sellers open their market and where does buyers open the market. So when we are talking about a candlestick, we are saying these are parts of a candlestick. If somebody can ask you, what was Coach Mopiwa saying today? You must tell the person that Coach Mopiwa was teaching us about candlestick anatomy. What is candlestick anatomy? It is the parts of a candlestick. So a candle should consist of the open, it should consist of the close, it should consist of the high, it should also consist of the low, as well as the body, which is called the real body. Okay, I'm mentioning these main 5. Yes, I'm calling them main 5 because sometimes you may not find this thing that we call shadow. Sometimes you will find a full body like this without a shadow down or up. All right. Yes. So in that case, you are going to find that the high of the market becomes where the body has ended. The low of the market becomes where the body of that candle has ended. That's why when they ask you today, what did you learn? Tell them that we have learned about parts of a candlestick. So it consists of the open, it consists of the close, it consists of the high, it consists of the low, as well as the body. But in other cases, you are going to find a shadow. When it is on top, it is called an upper shadow. When it is down here, it is called a lower shadow. But I'm going to go deep into these shadows. But for now, the thing that I want you to grasp is, what are parts of a candlestick? It is the open, the close, the high, the low, and the real body. This applies to both sides, whether it is a candle for sellers, whether it is a candle for buyers. It should consist of the open, it should have the close, it should have the high, it should have the low, and the body. Are we together? So the only difference in these two, you are going to see, okay, the only difference in these two, this is the difference. The close here is on top, okay, while here the close is down. Because this is for sellers. I said the sellers, they open on top, they close their market bottom. While buyers, they open from bottom, they close on top. That's the opposite. But the rest is the same. Are we together? Are we together? Give me a 1 in the chat if you are following. If you are following, give me a 1 in the chat. What are the parts of a candlestick? Can you mention them? If somebody can ask you, what are the parts of a candlestick? Can you give them? Can you give them? Can you give them? If someone can ask you, what are parts of a candlestick? Can you give them? All right. Thank you so much. Thank you so much. Thank you so much. All right. Now, before I come to the end of the closing, all right, because I want to take you step by step. I don't want to give you a lot of information that will make you confused. I want to take you step by step. All right. So today I'm going to give you a small portion. All right. I want to give you a small portion today that you're going to go home with. Now, let me come back here. Let me come back here. So we have understood that a candlestick should consist of these, whether it is for sellers, whether it is for buyers. Okay. I'm going to go into detail about the shadows and everything. But I want to come back a little bit here. I want to come back here now. I want to explain this. Just like us human beings, we do have different body sizes. Have you ever seen some of us, we are thin, some of us we are fat, okay? Yes, some of us we do have big bodies, some of us we do have small bodies. All right. So candles also, when you go to your trading view, you are going to see that some candles are big, some candles are long, some candles are short. Is there any information or is there any important information related to the size of the body of the candle? That is the question that I'm asking you. When you see a candle is very small, when you see a candle is short in nature, is there any important information communicated to you as a trader? Because now you are trying to understand the language of buyers and sellers using candles. So when you see a candle being small in nature, and you see a candle being big in nature, or it is long in nature, Is there very important information communicated to you? Yes. There is very important communicated to you as a trader. Don't just look at candles and say this one is short than the other. No. This one is longer than the other. No. There is a very important information connected to it. So you need to understand that language. Give me 2 in the chat if I am carrying you with. Give me 2 in the chat if I am carrying you with. I said I'm not going to give you a lot of information today. All right. But give me 2 in the chat if I am going with you. I'm going to end on the body sizes of the candles. That's where I'm going to end. So I want to explain now about the body sizes. Guys, they are signals that are being dropped in the groups. All right. So while we are here doing understanding of candles, please make sure that we are setting our robot to trade. Okay. They are signals being dropped in the groups. So leaders, please make sure that you forward those signals to different groups. Yes, make sure you forward those signals to different groups so that our members are able to trade. Are we together, guys? We are here, but things are happening on the background. That's why I love about this business. We are learning while we are earning at the same time. We are learning while we are earning. Yes, that's what we do here. Learning while earning. Okay, can I proceed? Can I proceed? Can I proceed? Give me a yes if I can proceed. Give me a yes if I can proceed. Okay. Now let me come back to my slide. Okay, let me come back a little bit here. There is something that I left here that I needed to conclude with on this part. All right. So I said that for you to understand that this candle, it is for sellers or it is for buyers, let me give you a trick. I want to give you a trick for you to know that this candle, it is for sellers or this candle, it is for buyers. All right. So let me say this. If they close, okay, if the close is above the open, if the close is above the open, okay, if the close is above the open, where is the open in this case? I'm saying if the close, this is the close, if the close is above the open, meaning to say the close is on top of the open. When you find a candle where the closing of the candle, okay, or closing of the price is above the opening of the price, it simply means that candlestick is a bullish candlestick. Why do we call it a bullish candlestick? It is for bulls, because bulls, they push price to the top. Okay, bulls, they push price to the top. All right, bears, they push price to the bottom. So if you find a candle where the close is above the open, that candlestick is a bullish candlestick. Are we together? I'm giving you tricks now to summarize what is here. I'm saying if the close is above the open, we can say that the candlestick is bullish, meaning to say the market is rising in this period of time. Why rising? It is coming from the bottom going to the top. That's why I'm saying the candlestick is bullish. Remember, buyers, they open from the bottom, they close on top. So if you find that the close is on top and the open is below, that candlestick is bullish, meaning to say there is rising of price. Price is rising, not decreasing. That's why we call it bullish. Are we together? Are we together? So the opposite of what is happening here, it is what is happening here. Meaning to say, if they close, I'm still using the word close. If the close is below the open, if the close is below the open, here I was saying, if the close is above the open, but here I'm saying, if the close is below, meaning to say is bottom, if the close is below the open, it means that the candlestick is bearish. It indicates that price is decreasing, price is going down. So it simply means this is the activity of sellers. When you find the closing of the price is below the open, it means it's sellers that are in action. When you see that the price, okay, the opening of the price is above the close, it should know that it is the activity of buyers. That's what I wanted to summarize here on this slide that I was sharing with you. Okay, is that okay? Is that okay? Before I come here and then paint another picture to end our Zoom. All right, but I'm gonna give you, I think, 4 minutes to ask questions based on what I have taught you today. So let's come here. I was saying that candles, some of them, they are long in nature. Some of them, they are short. Why long and why short? What long candles signify? What does short candles signify? Because you need to understand that you are going to find the same size of candles in the same time frame. Yeah, you are trading in 4 hours time frame. This candle here took 4 hours to develop. The same applies to this one. It also took 4 hours to develop. Why is it that this one is short, this one is long? What does that signify? So when we are trading in the market, when buyers and sellers, they are doing their activity, they apply what we call volume. Okay? The amount of buyers in the market brings volume. The amount of sellers in the market brings volume. So if that candlestick is a 4-hour candlestick and the candlestick is small in nature, it simply tells you that volume was not up to standard. Volume was not up to standard. So we are dealing with long and short candles. I just want to give you a valuable information so that when you go to your trading view, you see some other candles are small, some other candles are big. There is something that is being spoken to you as a trader. What is happening in that time frame? What was happening? Who was in charge? Are you following, guys? So I'm simply saying long borders refers to strong pressure. Let me paint it that way. Long borders refers to strong pressure. I'm saying strong pressure. But remember, this pressure that is strong, it can be for buyers, it can be for sellers. So I'm simply saying long borders refers to strong pressure. Okay, so if it is for buyers, it means it refers to strong buying pressure. If it is for sellers, it applies to strong selling pressure. So you're going to see candles that are long. That signifies that there was strong pressure in that market. Remember, it is a market of 4 hours. It is a market of 30 minutes. It is a market of 1 day. All right, it depends the time frame. But the thing is, if the candle is long, that signifies that that trading session, that trading session, there was strong pressure, whether it was a buying pressure, whether it was a selling pressure. But long candles signifies strong pressure. Are we together? Are we together? Are we together? So small candles or short candles signifies to low pressure. I said that we trade volume. We trade volume. So if the volume is low, you will discover that a candle, it will take hours for it to be filled up. It will take hours for it to be filled up because the pressure is low. But when the pressure is high, you are going to see when you open your trading view, you will see a candle filling up very quickly. Ta, 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 it's filled up. The volume is high. Are we together? So you will see that when you open your trading view. I'm just giving you this information so that when you open trading view, actually we're going to open it when we have come to the end of our session. Yes, we're going to open our trading view. We're going to go practical. We're going to look at different types of candles. But here now, we are just doing what we call theory. Questions, guys? I can leave it here for today. It's enough. Questions, guys? Questions? Questions? Candlestick anatomy. That's what we were doing today. How will you know the open and the close? How will you know the open and the close? When you are trading, you trade in a time frame, whether it is 1 hour time frame or 4 hours time frame. So a candle will open. A candle will open, it will close while you are watching. Someone is asking, how will you know the open and the close? It's simple. Yeah, it's simple. It's not difficult. When you come to your trading view, you are going to find this. You are going to find this. Let it load so that I answer this question practically. How will you know the open and the close? I said that buyers, they open from the bottom, they close it on top. Sellers, they open from the top, they close it on the bottom. Okay. Just a minute so that it can open. Okay. Let me change the time frame here. Let me put it 5 minutes time frame. These candles, they are 5 minutes. Or let me put the shortest one. This, let me put 2 minutes. Let me put 2 minutes. Oh, it cannot display. All right, this one cannot display. Trading View cannot display that for me because I'm using the free version. Okay, so it means the minimum is okay. Can you see, guys, what is happening here? Can you see what is happening here? Can you see what is happening there? This market, the current market here. Now we are going practical now. You see, you have taken me practical. Can you see what is happening here? Where is the market coming from? Where is the market coming from? Where is it coming from? Tell me, give me an answer in the chat. Where is the market coming from? Where did it open? I'm doing it in a short time frame so that you are able to see movement. Where is the market coming from? Where is it going? Tell me, give me an answer in the chat. Where is the market coming from? Where is it going? You are seeing there right on your screen. Where is the market opened? And where is it going? Tell me. Tell me. Give me an answer in the chat. Where is that candle opened? And where is it going? Give me an answer in the chat. Give me an answer in the chat. I said that we're going to come practical. Now you have taken me to do practical here. Where is the market coming from and where is it going? It's coming from the top going to the bottom. Okay? Who is in charge? If the market opens from the top going down, who is in control? Who is in control? If the market opened from the top going down, who is in control? Who is in control? Thank you so much. That's how it is. That's what we are doing here. That's what we want you to know. That sellers, they open from the top, they close on top. Actually, sellers, they are the ones that doesn't like price to go up. Sellers, they are the ones does not like price to go up. They are taking profit. When someone is selling, it means the person is taking profit. Are we together? So you are going to see that this is a 3 minutes market. This is a 3 minutes market. Can you see the time frame here? It's 3 minutes. After 3 minutes, this candle will close. Another one will start. So that's what I call a session. Okay? I hope I have answered that question. How do you know the open and the close? Did I answer that question? Did I answer that question? Another question, please. I'm closing. We are coming to the end of our sharing for today. Another question. Yes, you can analyze it in 1 minute. You can analyze it in 1 minute if you just want to do the analysis. But what are you going to get? Because in proper analysis, you should analyze your market in longer time frame so that you are able to find an entry in a shorter time frame. So when you analyze in shorter time frame, where are you going to find an entry? But it is just for the sake of analysis to see what is going on. You can do that. But for you to find an entry, then you should do it in longer time frame. Okay? Guys, we are not analyzing the market. We are doing candlesticks. So don't take me to analysis of the market here. Because you guys, you are asking me ahead of the lesson. I'm not there. Leader Julius is the one who's going to do that. Now I'm teaching you how you should read the behavior of buyers and sellers using a candle. That's what I'm doing here. Any other question? Any other question? Okay. So tomorrow we are going to proceed. Don't miss tomorrow's lesson. We're going to proceed from here. We are going to go deeper now into the candlestick. We're going to go deeper into the candlestick. Today we have only done candlestick anatomy. Yes. The opening, that is part of a candlestick, as well as the body sizes of the candle. Do they matter? The body sizes of the candle, do they matter? Yes, they matter. They give you information about volume. The size of the body communicates a particular information to you as a trader. So that you should know, if you are seeing candles that are small in size, what does that tells you as a trader? It means there is no volume in the market. So if there is no volume, you cannot trade. Yes. Okay. So let's end it here for today. I believe that you have learned something from the beginning of our lesson. But when we go deeper, please don't get lost. This is just the background. I mean, this is just the laying of the foundation. I've just laid a foundation today. So tomorrow we're going to go a little bit deeper. We'll be going deeper and deeper until we have come to the understanding of a candlestick. Yes. Before we learn how to trade, okay, how to enter a market using the candlestick. That will be another session after you have understood what is a candlestick. Thank you so much, guys. Let's meet in the next Zoom. that is coming at 9 and 10 different time zones. Thank you so much, guys. We love you all.